Qatar's ongoing digital transformation continues at pace. The fintech scene is particularly vibrant and alive with innovation. SkipCash, for example, is a startup that enables digital payments via QR codes and allows consumers to link all their cards securely. Dibsy is another new financial technology company that dramatically simplify payments and transactions between institutions and businesses, including other fintech companies. Setup takes just 24 hours and the service is pay-as-you-go. Both have been supported by the Qatar Financial Centre, which plays an increasingly important role as the country's primary platform for nurturing the breeding ground for fintechs and to help them gain a competitive advantage.
The pandemic has had a great impact on global business. Qatar availed 75 billion riyals to assist companies that have been impacted in the private sector. It's expected that the Qatari economy will grow at 3.2% in 2020 and 4% in 2021. Fintech is the automation of financial services. We currently have a fintech circle with more than 30 companies already established. Companies are given a special type of license which will allow to conduct and innovate within their technologies to service financial services out the KFC with very low regulatory environment. So we have a very ambitious plan up to 2022, and we will continue to pursue economic development for the near future.
A SARS-like virus which has infected hundreds in China.
COVID-19 is spreading faster in India.
Europe is now the epicenter.
The UK tonight acknowledged it's losing its battle.
And more than 3 million people have died.
Has now reached the United States.
The United Kingdom has become the first country to approve the Pfizer coronavirus vaccine.
The coronavirus pandemic has tanked the global economy.
It's worse for a single quarter than we ever saw during the Great Recession.
4.4 million people filing for initial jobless claims.
Around 50 countries have begun vaccination programs against COVID-19.
Other countries will have to wait a while longer.
Outrage at the death of George Floyd.
Demonstrations, riots, and violence from coast to coast.
The events in Washington have taken a violent and tumultuous turn.
Israeli airstrikes flattened 3 apartment buildings in Gaza City.
Biden administration's ambitious climate agenda. The change here is just monumental.
Coast to coast, signs of reopening.
Hundreds of families separated by COVID-19 were reunited at last.
Welcome back to the Qatar Economic Forum, powered by Bloomberg. Our world is marked by the existential threat to civilization posed by climate change. Soaring temperatures, rising sea levels, raging wildfires, and widening droughts are the stuff of daily headlines. Mother Nature is taking her revenge. Reducing carbon emissions and replacing fossil fuels has become the challenge of the day. The shift to green energy is no longer an option, but an imperative. Can we buy the time needed to get there? The answer may lie in a surprising place. Let's go to the Arabian Gulf. She owns the oceans. She is a titan of the sea.
The first thing that strikes you when you see the Q-Max tanker is its sheer size. This is the largest liquefied natural gas tanker in the world. It has an overall length of 345 meters, and that is bigger than the Eiffel Tower.
Our journey started at the control tower on land. The operators here command a panoramic view of everything around them on the sea. Give us a sense of this room and what everybody is doing here with all the information that we're seeing on the screens.
We are very much located in the tower traffic control, where the people are always operating around the clock, 7 days a week without a stop, ensuring there is a precise movement in and out.
The teams in here monitor the direction, location, and loading status of each LNG vessel. Safety is the #1 priority.
Okay, I see the visibility is quite low today.
And buckle. After a safety briefing, we make our way to the shore and head toward the Q-Max. These supertankers are key to Qatar's economy. The country is reliant on these ships to safely deliver its product to the world. LNG has been hailed as an alternative to oil and coal, given its lower carbon emission. Qatar is the largest exporter of LNG. Its market share is about to grow further as it cuts its production costs even lower and ramps up supply through its expansion of the North Field project. Demand for LNG in China is skyrocketing, forecast to nearly double by 2040. It's tough to deliver LNG safely. Captains have to navigate bad weather, sea piracy, sea traffic, and rough water. When you're on the Q-Max and you're traveling on different routes, what are some of the most challenging routes?
The most challenging route, that where you find the route is very narrow, such as the Malacca Strait in between Malaysia and Singapore, where is the weather in China Sea, near Japan, the typhoon, sometime in part of the year.
The safety of the cargo on board is vital. Do you see the Q-Max as really continuing to build the future of the economy of Qatar?
Of course, the future of Qatar will be built by the exporting of the LNG.
But there's looming competition, like Russia's Yamal LNG project and the planned Northern Sea route that may change Qatar's dominance with shorter sailing times and LNG destined to Asia too. The bigger challenge is the climate crisis, which is forcing the world to push for a faster transition to green energy, solar, wind, hydro. Qatar and its supertankers are steering into challenging headwinds.
Port 20.
LNG is now being increasingly viewed as a bridge that buys time for the world to move from fossil fuels to renewable energy. But until that time arrives, these majestic vessels, with their sophisticated technology, will continue to rule the waves.
Hello, everybody. I'm Alex Deal with our next superstar panel. This is how the oil world is in part in the middle of this energy transition, what the role of those companies are. So I want to welcome our all-star panel. I'm joined by His Excellency Saad bin Sharida Al-Kabi, Minister of State for Energy Affairs, the State of Qatar, and CEO of Qatar Petroleum. Also Shell's Ben van Beurden in Qatar, Total Energy's Patrick Pouyanné in Paris, and Darren Woods of Exxon joining us from Houston. I want to jump right in. The news of the day is, will we see $100 oil? Analysts keep weighing in that we could. So you're the perfect panel to ask. Is it more likely that we see $50 or $100 oil? Let's start in Qatar. Ben, let's start with you.
Hello, Alex. I think we're probably going to see both $50 and $100 oil. Don't ask me which sequence, though.
Okay, fair enough. His Excellency, how about you?
I think with the discussion on energy transition and the lack of investment in oil and gas that's going on now for the last couple of years, there hasn't been enough investment in oil and gas projects. And if this continues, I think tied to the energy transition discussion, it could have a probability of going higher much more than lower.
Patrick?
Volatility, I would say. So quite a chance to reach 100, but we could see again. And I agree with His Excellency that there is a lack of investments because of the energy transition in the oil and gas industry.
Darren?
Yeah, I would agree with what the panelists all said. The coming out of the pandemic and the lack of investment in our industry, I think, is going to exacerbate the supply and demand tightness as the economies pick back up again. And then with time, we'll see supply pick up and rebalance. So we'll see both of those, but in the shorter term, probably higher prices.
And that's usually the thesis from analysts, is because the big oil energy guys like you guys are actually spending on different things and more capital discipline, that's going to affect the market and the ongoing supply, which is an easy way then to talk about how you allocate money. Because if you get to 100, there's tons of free cash flow that everyone's going to be throwing off. So I'll go kind of back around the circle. Darren, with that extra cash, how do you know where to allocate the most?
Well, Alex, I'd say we take a longer-term view. Can't get too enamored in the short-term markets, we all know, and we just lived through the pandemic where prices came down pretty sharply. They're now going to come back up high again, and I expect those to come back down again. So as we look at the industry and the forecast and our capital allocation, we do it for a long-term horizon, and we make sure the investments that we're making are robust to the price cycles, particularly the low end of the price cycle. And so I think you're going to see, certainly within Exxon Mobil, continued discipline in making sure that the projects that we're investing in are robust to the low price environment, irrespective of how high prices get here in the short term.
All right, fair enough. Patrick, Total Energies changed its name, so you're putting a lot of money behind things like wind and solar. With $100 oil, what does that do for you?
I think on oil and gas, obviously, exactly like Darren, we plan on $50 per barrel. We plan on a low-cost break-even project. So my view is, and we give a lot of emphasis in our strategy to natural gas, in particular LNG. So no doubt we will continue on this strategy. We'll execute it. If we have more cash, first, because of volatility, I think we'll consolidate the balance sheet of the company. But then, as we have an ambition to become a very large, one of the top 5 renewable electricity producer by 2030, we'll allocate 20-25% of our capex to renewable energies and new energies.
Does that increase with more free cash flow or no?
Yeah, it's an increase because today this year we'll invest $3 billion, so it might reach $4 billion in the next years if we have more cash flow. So again, growing our ambition, but of course a profitable growth, which is what we are targeting in renewable electricity.
His Excellency, Your Excellency, Qatar is investing big in LNG. Huge, huge, huge growth potential. Does $100 oil make that easier or harder to do?
I think regardless of how high the oil prices, our investment is very clear. We see that gas is sort of tied at the hips with the transition discussion, and I think gas is part of the solution for a longer-term transition. And we see that the majority of our investment, of course, is going to go into gas, but we're also investing in renewables such as solar here in country and elsewhere. So we are part of the, I think, solution for the transition as gas and LNG in general, not only in Qatar, but worldwide. We have invited our colleagues here, all three colleagues are bidding to enter into the largest LNG development in the world that we've announced just recently for 32 million tons of LNG. The volume that we have really tendered for or brought in bids for, we have already received double the required equity as interest, and we have SPAs or sales and purchase agreements for offtakes that are also offered by colleagues and others that are double what we required. So the interest of LNG with carbon sequestration that we have is a unique opportunity to have a project that is very environmentally basically advanced, if you will, with the carbon sequestration from the beginning. So we're doing it very responsibly, and we will be part of the solution for the long term.
So just to be clear, am I confirming that Shell, Total Energies, and Exxon are all bidding for a part of that LNG expansion?
Yeah, yes, they and others, and the bids are double what we requested, whether it's in SPAs or equity. So there's great interest, and I think it's a big part of it. But a big part of it is due to the carbon sequestration and gas being part of the solution for the future.
So Ben, you can circle this part of the conversation out in terms of, okay, the free cash flow, where are you going to be putting it? Clearly into Qatar and LNG, but where else?
Well, Alex, first of all, if indeed we do see a continued strengthening that we are seeing at the moment, I think our first priority remains indeed strengthening our balance sheet, returning more cash to our shareholders, and then at some point in time, indeed, also accelerating growth of the company. I would say, particularly in a high oil price environment, it shows that it's important to keep your oil business healthy because it will fund the entire strategy of the company. And that's our strategy, keep our oil business healthy for some time to come. But at the same time, have a very strong gas business, a stronger gas business than our oil business. And indeed, that is why we are also keen to participate with our partner, Qatar Petroleum, in the expansion here in Qatar. But then I would also say we want to put a disproportionate amount of money in what we call the future of energy. Ultimately, I think high oil prices, if they are going to arrive, may not continue to stay there. So we have to prepare for the future, and we will do that by investing indeed in power, in biofuels, in hydrogen, but also in nature, because these are the solutions that our customers need as they transition to a net zero world as well.
Let's stay on LNG then for just a moment. His Excellency, Bloomberg has reported that Qatar is selling gas cheaply to help lock in sales, which would then imply some competition risk from, say, Australia or US LNG. Can you talk to me a little bit about the pressure that you feel from supplies coming on in other major areas?
We are very disciplined in what we do regarding our marketing. We don't look at competition as competition. We look at how can we compete better with ourselves to be the lowest cost producer and then place volumes in the markets that are growing most. So what you have seen us do is growing in the market. Regarding pricing, we really don't discuss pricing per se, but in general, we go with the market and it's supply and demand. When there is ample supplies, prices do come down, and then when there is shortage, it comes up. What we don't like to see is what's happening with really the energy transition and a lot of short, if you will, or shortage of investment in LNG, which is a big part of the transition, where we think that there's going to be a big shortage in gas between the 2025-2030 period. And that could cause, I think, a big spike in the gas market. And LNG market is not like oil. You saw the big spikes that happened earlier in the year. So I think we're placing volumes where we think they are needed, and we're working. And you're going to see us sign in the next few months more deals regarding prices. We go with the market, and whatever the market dictates is where we are.
It's a semi-similar question, Patrick, for you. I mean, you guys have some LNG projects, Papua New Guinea, Mozambique, and wanting them to remain competitive, but then at the same time, there's this huge expansion field in Qatar. Do you feel like there's room for all of it?
Yeah, I'm a strong believer that the energy transition is going with natural gas, in particular with LNG, as being having a big share. You know, the demand for LNG in the last 5 years have grown by almost 10%, driven by China and India. And even last year, in the middle of the economic and pandemic crisis, there were two energies we are growing. It was renewable electricity and LNG, plus 3%. So we believe that there is a strong attractiveness from LNG. And so we are quite aggressive in all our strategy, and we have positioned Total Energies fundamentally. All our growth will come from these two segments, renewable electricity and LNG. So I'm not afraid by having too much supply and demand. We know that we are in a commodity business. What is important is to invest in projects which can resist first quartile projects with lower costs. And the project you mentioned, either PNG or, of course, Qatar, and it's why Qatar is, of course, an high interest, or Arctic LNG as well, where we invest in Russia or in some projects in the US have these characteristics. So no doubt, and we are not afraid to see imbalances in the market. On the contrary, last year there were some projects which were, I would say, delayed, and it gives room to continue to have a strong ambition in LNG for the next coming years.
So, Darren, you've just had to spend a lot of time talking to shareholders recently. How do they feel about LNG? I feel like a few years ago, it was definitely going to be the bridge fuel. Then it was going to be the permanent fuel. But now it feels like in some shareholder circles, it's become more of like a dirty, non-green word. What has been your conversations, Darren, on that respect?
I think, you know, if you look at credible third-party analysis, a variety of them that are out there, including the IPCC, the IEA, all recognize the important role that gas is going to play in economies well into the future. And it goes back to critical sectors of our economy, industrial sectors, power generation sectors, that as economies grow, as the demand for electricity grows, and the products that support modern life and the industrial processes that make those products, the need for energy in those sectors is going to grow. And today we don't have good low carbon solutions. And so I know Exxon Mobil and many of the other panelists here are working on those technologies to help address that. But certainly gas is going to play a really important role. And I think that's broadly recognized. The challenge then is with using gas, how do you address the emissions associated with that use? And His Excellency mentioned carbon capture and storage. We think that's one technology which will help address what we refer to as this dual challenge, which is one, providing affordable and reliable energy, while at the same time addressing the challenges of the emissions.
Perfect setup. This leads me into the poll for the session, which gets at just this issue. So the poll question is, which of these should be the priority for the energy transition? One, A, divesting of oil and gas interests. B, investing more in renewable and low carbon technologies. C, increase investment in greener energy sources. Or D, do more carbon sequestration. And I bet that all of you would say all of the above. But I'm very interested to see what the poll shows, if we can just get that up there. And in real time, we'll be able to see what people think. And this is really pivotal to all the oil companies, oil countries' strategies. Oh, wow. Wow. Okay. I don't think I've ever seen a poll with 100%. But it looks like that's investing in renewable and low. Did one person vote? Come on, guys. Okay, there we go. So the majority investing in more renewable and low carbon technologies, some divesting of oil and natural gas interests. Okay, increasing money into greener energy sources. Oh, that makes me feel a little better. I was gonna be like, one person voted and it was all about green energy. So let's use this as the basis for the next part of the discussion. And Ben, I'm actually gonna go to you first on this, because Bloomberg is reporting that you're shopping around your Permian assets. Some think that you should get rid of oil and gas assets and sell them off. Can you talk to me about it?
Yeah, thanks, Alex. If you don't mind, I won't comment on market rumors. We simply never do that. I was looking at that poll and I thought, interesting. So here we have almost 100% of the measures that are being polled supply-side measures. Whereas the reality, of course, is that the supply side is not going to drive the energy transition. The energy transition is going to be driven from the demand side. So I can say, sure, we will probably be ending up doing a mix of the four things being suggested here. But the more important part is that ultimately our customers will have to make the energy transition. They will have to start using different types of energy, different type of technologies, different type of mitigation techniques, perhaps, so CCS indeed, in order to make that energy transition happen. A lot of people look at us and say, well, look at your emissions. And then I mean our scope 1, our 2, and 3 emissions. But our scope 3 emissions are 93% of our total emissions. That's the scope 1 emissions of our customers. So if we are going to tackle that energy transition, we have to start working with our customers how they will use different types of products that we may then indeed supply. And for my company, which supplies 4 times as much as it produces itself, the challenge therefore is how to work with our customers to make them successful in their energy transition. And that is what I believe is going to be needed and what policies should be focused on. This whole idea that if you would just curtail supply, the world has no choice but to go for an energy transition, I think defeats any logic that I've come across.
So that seems like then the Permian is still important.
Of course, the Permian is an important asset for I think the world. I mean, bear in mind, we are, if you look at the current supply sources of oil and gas, we are looking at decline rates in supply that seriously outpace any demand shrinkage that the world would need to follow in order to get to 1.5 degrees. So the whole idea that you would just get rid of supply and that would sort of teach the world a lesson on how to do the energy transition, I think is a fallacy, to be perfectly honest.
The other part of that poll, and His Excellency, this will be for you, was also about decarbonization. And I wonder if you could talk me through some of the work you guys are doing to decarbonize LNG.
We started a very long time ago in decarbonizing LNG, and we have currently, as we speak, we've started CO2 sequestration a few years ago. As we speak, we're sequestering, capturing and sequestering 2 million tons a day of CO2. And with the plan for the North Field expansion, as we have announced in the past, by 2030, we'll reach around 9 million tons of CO2 that will be sequestered. If I can just elaborate on that point regarding the transition and really the demand side, we need to also remember we're not talking about really developed nations only and the richer nations that can afford to do some of the things that they can do. We have about 800 million to 1 billion people that are deprived of the basic need of electricities and basic fuels. So I think when we talk about transition, we also need to be cognizant of the fact that we're harming a lot of people by really not giving them enough supply of basic needs that they may have, and they may not be able to afford some of the things that we're talking about in the transition. So transition is a word that's used that needs time, I think, to develop. We need to be very responsible, very deliberate, and I think do it responsibly, but also we need to collectively do it as humanity and not be unfair in how we do it.
And that sort of echoes what Ben was saying about customer-driven side of things. So also, obviously, what came out right away was investing more in renewables. Patrick, Total Energies, when you changed your name, you're doing just that. Can you talk to me now that you've been at it for a while? How are these returns in these renewable assets? Can you talk us through that?
Yeah, of course. But before, I just would like to comment the poll, because there is an very interesting lesson for me, is that the first item about divesting oil and gas was less appealing to the answers. And I think it's interesting because the whole question of energy transition is in fact more for our companies to allocate part. We need oil and gas to allocate part of the cash to greener energies, to renewables, and to make the transition real. So about profitability, I repeat what I said several times. All the projects in which we invest have a target to deliver at least 10% of return on equity, in renewables in particular. You can do it today if you consider the projects that you use, of course, the low interest rate and to leverage the projects. And also, if you take benefit from the fact that there is a huge attractiveness for many investors in green assets and renewable assets. And so all the assets we are developing, we have a plan to divest 50% of them. And with this business model, we reach 10% return of equity. So, I mean, we bear the investments during the development because we have the capacity to do it. But then we will offer half of the projects to other investors. So this debate about renewable profitability is interesting, but I would also remind that renewable business models are very different from oil and gas. It's not commodity pricing today. We bet on PPAs with 10, 15 years of stable revenues, which of course offer a different risk profile compared to the investment we do in oil and gas. So for Total Energies, we really think that the combination of maintaining a strong foot in oil and gas with its volatility, but also developing and preparing the future, growing our renewable electricity arm is a good way to prepare and to ensure, I would say, the perenity of the company.
A quick follow on that, Patrick. Are you noticing, though, there's more money in those assets right now? Are you having to pay up for some of the renewable assets that you want?
No, we keep the discipline even on that. There is a huge amount of opportunity around the planet. You don't need to buy existing assets, developed assets. You can perfectly concentrate, like we do in oil and gas, of having access, I would say, to early stage developers, and this is not expensive. You can do it. There are a lot of opportunities. Of course, if you rush to the most mature markets, which are today Europe, the US, and Middle East, I would say in somewhere, and if you participate to tenders, of course, it's quite like in oil and gas, there is no much difference. You know, tenders do not deliver the best returns. But if you are smart and you are able to create your own opportunities, there is a lot of opportunities around the planet to find very good returns, I can assure you.
So this all brings up the question that I run into a lot as a reporter is how quickly should companies move and how quickly should they transition, not just how they do it, but how fast they should. And Darren, and that's an opening for you. So there's obviously a big shift on the board with Exxon, Engine 1 getting 3 seats on that board. And I wondered if you could give some perspective on, have you met, what it's like? Is there, on the whole board, openings for a real strategic shift and how quickly? Can you just talk us through some of the language right now and some of the stuff that you're hearing?
Sure, and I've talked to all the new board members, and I think they all understand and recognize the dual challenge, the role that we play in that challenge, not only in working towards transitioning to a lower carbon future, but at the same time meeting the demands that many of the panelists today have talked about, this desire or need for affordable, reliable energy. And so that conversation continues to happen. And I think there's been general alignment is that our company, with the foundation that we've built over decades in technology, can play an important role in both sides of that dual challenge. With respect to emission reductions, obviously the pace that you can go is a function of the businesses that you're in, the technologies that are available to address the emissions from those businesses, and as Ben's pointed out, your customers and the demand for the energy that your customers or the products that you produce at your customers, all those things come together, and government policy. And so this is not a unilateral process. There's a multitude of stakeholders, and it's going to require collaboration across all of those stakeholders, across all of those entities to drive this reduction. ExxonMobil has been very focused on our own emissions and reducing those emissions as we've gone through time. If you look at the progress we've made since 2016, when the Paris Agreement was formed in 2020, we were down 11% in our emissions from 2016. That's far in advance of the OECD countries' reductions, and far in advance of the commitments made as part of the Paris Agreement. So we're making good progress in that space, and we'll continue to do that. But ultimately, the businesses that we're in, the products that we supply, and the operations that are required to supply those products are going to be a function of what the world and society needs from companies like myself and the other panelists here.
Yeah, and that is going to bring us to the role of government and such, which we'll get to in just a second. I just wanted to then end with this part of the conversation with Ben, because you also got some pressure losing that court ruling to cut emissions now by 45% by 2030. You recently wrote in a LinkedIn post that Shell would accelerate those plans to reduce emissions. Do you have any clarity yet on how fast you can go and what kind of plans you're going to be looking at now?
Well, of course, we are working through the details of it, but let me say the court order that we got in the district court in The Hague to reduce our emissions is twofold. First of all, reducing our own emissions, our Scope 1 emissions, by 45% compared to 2019. And I think probably with some work, we can see a pathway to doing that. And we are up for that challenge. It is a challenge that we had set ourselves anyway. The second challenge, to reduce the emissions of our customers by 45%, is a different story. First of all, we don't have a performance obligation. We have a best endeavors obligation. And of course, that's also very much in line with our strategy. Our strategy is to purposefully and profitably decarbonize our customers. And that is what we will be doing. Can we get to 45%? Well, let's see. But again, the point that I'm trying to make is the challenge with reducing the emissions of our products, so the emissions of our customers, should not be a challenge of how quickly can we get rid of our customers. It should be a challenge of how quickly can we work with our customers to change their energy needs in lower carbon energy needs. And again, some of that may be technology dependent. Some of that may be driven by our business models. Some of that may be driven by our innovation. But for a large part, that is also going to be driven by the policies of governments that these customers work under. We can only reduce in any one country, say, the emissions from the petrol that we sell if we have a significant shift from petrol engines to electric vehicles. That is not something that we can drive. We can, of course, ever more target that particular segment of our customer population. But if that's only 0.1% or 2% or whatever in the market that you operate, you only can shrink in order to meet that particular objective. So yes, we're up for that challenge. We will do as much as we can. We will work very hard with governments, with customers, and of course with our own technologies to get as far as we can. That's the challenge that I'm embracing. But at the same time, I'm also calling out to governments to also step up to the plate, because this is not a challenge for one company, not even for one sector. This is a systems challenge that we all have to embrace.
So, His Excellency, you sit right there on policy and then also as a CEO of Qatar Petroleum. What needs to happen on the government side?
I think all governments are already taking action regarding the energy transition. What has to happen, I think, is we cannot, overpromise and underdeliver in any sector. I mean, whether it's oil and gas or other sectors, we need to put realistic targets. And geographically, it will change from country to country. So some countries will have more capacity to do renewable. I mean, as an example, if you're a country like Qatar, we're already embarking on doing a lot of solar here in Qatar because we have a lot of sun, but we don't have wind. So other countries will be more into wind. You have battery challenges or storage and battery challenges that will need to be worked out, and technology will need to be improved. So I think from a legislative part and from governments, it depends on each government and where they are as a baseline and where they want to go. I think the majority of governments are taking this very seriously, but it has to be an integrated solution where it's the supplier and the customer or the end user that have to all work together. Countries will have to put the policies in place to help do that. But there is also another challenge, which is the bill that will have to be paid to bridge that gap. And that bill, is it put up by customers, by governments as subsidies, or is it, definitely there has to be a shared burden. And I think not all countries will afford to do that.
I completely agree. And then I wonder, His Excellency, where that leaves things like a carbon price or a carbon border tax that Europe is sort of looking into. What's the role of that kind of thing?
Yeah, I think if there is a unified carbon credit and carbon pricing that's available, I think for somebody like us that wants to bring ample supplies of gas into the market to help with the transition, when we have carbon sequestration and that we're doing that costs us somewhere in the range of $300 million to do, that we're actually not getting any gain from. I think if you actually can have carbon trading and a mechanism that's very defined and clear, and where you have a mechanism where it can be traded at prices that are fair and equitable to what you want to achieve, I think then you'll have a lot more people going into sequestration, and it will make sense for a lot of projects that won't make sense without it from an environmental perspective and from a financial perspective. So I think we all have to collectively work together to make sure that we have a carbon mechanism that can be traded, can be priced, that can be fair for all countries.
I'm actually going to jump over you, Patrick, for a second.
If I may comment on this one, because
sure.
Sorry. Yeah.
Go ahead.
No, you talk about carbon pricing and carbon border adjustment mechanisms, etc. And I fully agree with His Excellency. Carbon prices is going to be very important, and it will enable all sorts of things that are currently out of the money. So a carbon price is absolutely essential, but it's also absolutely insufficient. We should not think of a carbon price as a panacea for the energy transition. It will help rational actors like industrial players and suppliers make different choices. But ultimately, people are not going to change their car because there's a price on carbon. People are not going to change their airline behavior because there's a price on carbon. People are going to not change their house because there's a price on carbon. That is only going to happen if we put certain mandates in place. So in addition to having carbon pricing to influence rational economic actors, we also have to have policy and regulation that mandates things that are not going to be moved by just carbon pricing. And I think that is quite often overlooked, because the amount of the economy that we are going to move by putting a carbon price in place may be significant, but it's less than 50%. The other part needs to be done by smart mandates, smart policy, smart regulation.
So then let me jump to Darren, because Darren, you have proposed an enormous carbon sequestration project on the Gulf Coast that definitely needs support elsewhere. So talk to me about the role of policy.
Well, I agree with the points that Ben and His Excellency have made, and policy is going to play a very important role. If you look at where carbon emissions have occurred to date, they've occurred in sectors where you can sell into existing markets and realize return from the products you make. When you move more broadly and try to address economy-wide emissions, there is no market today for reducing CO2, and therefore no incentives or no price incentives, no mechanisms to drive that. So you can achieve that through a carbon tax, or you can achieve, or a price on carbon, or you can achieve that through regulations and policies that ultimately have a price, but not quite as explicit. But there needs to be some mechanism to drive that reduction. What we tabled in the Gulf Coast here in Houston was a very large-scale project and proposal to reduce emissions from an industrial corridor in the Houston Ship Channel that has the potential to reduce 100 million tons per annum by 2040. And that's collecting the emissions across a wide band of industrial sites along the Houston Ship Channel. That does need a higher price on carbon, a higher government incentive on carbon, because we're moving to more and more dilute CO2 streams. The more dilute the stream, the more expensive the concentration and the storage. That project has lots of advantages. And if you look at the cost required to capture and store that economically, we estimate it's about $100 a ton for every ton of CO2 that's removed from the atmosphere. That is much less expensive than some of the current policies that the U.S. government is pursuing. And so with the administration coming into office and pushing for more rapid decarbonization, we thought it was important to make sure that we had options on the table for the government to consider, and as they drive towards lower emissions, to find options that are lower in cost and have the potential for large-scale reductions, so that the government's effectively allocating scarce resources to get the biggest bang for the buck.
All right, I got 30 seconds. Patrick, you want in on this question?
I want to ask a question to.
You want to ask a question?
I didn't hear. Sorry.
Oh, I said, did you have any comment on sort of a carbon tax, carbon price, the role of government?
No, I think everything has been said perfectly by Ben, Darren, and His Excellency. I think carbon pricing is important, but innovation as well, and policies are also very important. So it's a collective effort. It's not only unilateral efforts. It's for governments, customers, companies, investors all together if you want to make the transition a success.
Thank you so much, everyone. I could do another half hour, but they're going to kick us out. So His Excellency, thank you. Patrick, Darren, and Ben, thank you all very much. It was a sincere pleasure.
Well, thank you so much for joining us, everyone. I'm Francine Lacqua from Bloomberg TV, and I'm delighted to be speaking to Ivan Glasenberg. He's the chief executive of Glencore. Ivan, thank you for joining us. We'll talk about the energy transition and some of the things that Glencore is doing. But first, I need to ask you about the commodity prices. Do you see the rally that we've seen in commodities actually continuing?
Yeah, thanks, Francine. I do, because you got the big infrastructure spend, which is occurring in China at the moment. It started early when the COVID crisis hit and the Chinese got out of the problems. They started spending on infrastructure and pushing the infrastructure fiscal spending, and that started the rise of commodity prices. You also had a few disruptions around the world in certain commodities because of the COVID, and that tightened up supply, and that allowed the commodities to push up to where they are today. You also have infrastructure in picking up in various parts of the world, but we do see it coming in the United States when eventually they pass the infrastructure bill, and the speculation of commodity prices picking up on the back of that will start driving them up. So I think the pure underlying demand supply fundamentals are putting commodity prices to the levels where they are. I know recently the Chinese have tried to push it down to bring it back to lower levels. I think that's a short-term game because the underlying fundamentals will keep it at these levels.
So how much can they actually try and talk it down, China?
Well, they're not trying to talk it down. They're taking some material from the strategic stockpiles and putting that in the market. Now, how big the stockpiles are, we don't know exactly, but they can do it for a while, but eventually they got to restock the strategic stockpile. They can't keep it at these low levels, so they'll come back into the market. So I think it's a short-term phase.
Short-term, like a couple of months? Are we actually at the start of some kind of super cycle, but a super cycle that's very different from last time around?
Yeah, well, what was long? We've had two sort of super cycles, you can say. In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines, and started producing more. That pushed it down, and you had the 2015 commodity price drop. Now it started looking better until COVID. COVID pushed it down, as we said, and now we got the rise with the infrastructure spending occurring in many places around the world. Is this a super cycle? I don't know if you want to call it a super cycle, but I do believe commodity prices will stay strong for a long while longer. And I think when the American infrastructure plan comes into fruition and the actual shovel-ready, how many shovel-ready projects they have, I don't know, but let's assume it will take them 18 months to get going. You will push commodity price will stay high for a long time. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people, and you have United States kicking in, upgrading their infrastructure. Demand for commodities will stay for a long time. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on, but that's a lengthy debate. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, And I think the mining industry is not ready to add massive new tons to the market. But with the new green energy, besides the infrastructure and all the green energy demand that we'll talk about later, I believe the mining industry is going to struggle to keep pace.
So, Ivan, is a surge, for example, in coal prices, which currently are at around a 10-year high, a warning sign what could happen, for example, in oil and gas with the energy transition now that companies just aren't investing enough, which goes to what you're saying?
Yeah, that's clearly. You've seen, I think, thermal coal is leading, is a perfect example. The world has said we want to reduce the amount of thermal coal production. Mining companies definitely are not investing in more thermal coal mines. A lot of the mining companies are even getting rid of their thermal coal mines. We ourselves, we said we'll run down our thermal coal mines over time, and we said we will follow the Paris Agreement, whereby we'll reduce by 2035. We're talking about 40% there, and by 2050, we will run down most of our coal mines. So what you are having is supply being disrupted, no new supply coming into the thermal coal market. However, demand is still there. Now we can talk about the green energy and how we're going to switch from fossil fuels to renewables and how quick we can do that. But right now there are coal-fired stations around the world, especially in Asia, which continue. There are still new coal-fired stations being built around the world, as much as we don't want that to happen. But the developing countries, coal is still the cheapest form of energy, electricity supply, and these coal-fired stations will continue. But if you are cutting supply and seaborne market is about 950 million tons, and you reduce that, and that continues reducing, you will have coal at these high levels. And today you have Australian coal at $130, South African coal at $120. That's what happens when you cut supply and you haven't found a solution for demand. I think in your previous panel, I was listening there, that's the situation. Cut fossil fuels, that's fine, but we've got to make sure renewables can fill that space and we don't have a gap. And if a gap is going to be there, you're going to have higher commodity prices.
How challenging, Ivan, given what you've just explained, do you think the energy transition will be? And I mean, I know you believe that it's challenging, but why? Is it the lack of metals that actually are used, or is it some of the things that governments are not looking at?
Yeah, look, the energy transition, we today we got to substitute fossil fuels, whether we're talking about coal, oil, gas, and we've got to reduce that by the year 2050. And we're talking about replacing that supplies 80% of the world's energy demand today. So, you know, if you've got to do that, we still got to grow the amount of energy. By 2050, you've got to produce 2.5 times more energy the world's going to need. You still have about 800 million people in the world who still don't have electricity. We've got to supply them electricity. You still have about 2.6 billion people in the world that still don't have clean cooking. So a lot of new energy has to be supplied to the world. Now, if we're going to take that renewable, today the world produces around about 3,000 gigawatts of renewable energy. We got to take that up by the year 2050 to 26,500 gigawatts of energy, renewable. What does that mean? We got to produce 20 times the amount of solar energy than we're producing today, 11 times the amount of wind turbines, and we talk about electric vehicles. We say we want to produce by the year 2030 to follow this energy transition, around about 55 million vehicles per year being produced. Today, what are we? That's 18 times the amount of electric vehicles we're producing.
But Ivan, are you telling me that that's almost impossible that we achieve those targets, or you're saying, you know, we can achieve them if we do this today, but it will be difficult?
I don't know if we can achieve them. Can we switch over to that amount of wind and solar in that amount of time? I don't know. But let's assume we can, and we can fill the gap of fossil fuels with this wind and solar. The question is, do we have the metals to supply it? To give you an example, copper today, we produce, the world consumes 30 million tons of copper. By the year 2050, following this trajectory, we've got to produce 60 million tons of copper per year. Now, if you look at that, that means we got to grow and increase copper supply by 1 million tons per year. If you look at historical past 10 years, we've only increased 500,000 tons per year. Do we have the projects to add 1 million tons of copper per year? I don't think so. I think that's going to be extremely difficult. Take the same if you take nickel. Today we produce 2.5 million tons of nickel. We've got to grow to 9.2 million tons of nickel. We've got to produce an extra 250,000 tons of nickel per year. We've only been growing at about 100,000 tons of nickel. Same goes for cobalt.
But so if we're not able to actually meet the forecast, what does the industry do about it? Is there anything that they can do now to make sure that they grow at least at a pace which is adequate to keep up with some of the things that you're talking about?
Look, the mining industry is going to look at it intensely. We do see the Chinese who are focusing on this, and we see them trying to increase production in these various commodities. They were fast to see this, and they've been looking at this over the last 10 years at least. We've seen the Chinese have been increasing nickel production in Indonesia rampantly. We see nickel pig iron in Indonesia. I think today they're producing around about 800,000 tons. That comes from a very low level. So there, the Chinese have seen it. We see it in the DRC. If we talk copper and cobalt, the Chinese are pushing copper and cobalt production in the DRC. And I think they're seeing it. Us, the mining industry, we're trying to grow and we're trying to increase projects. But as I said earlier, projects are in the more difficult regions, not the easy projects. Naturally, the world does the easy projects first, the difficult ones later. We're in that stage now in the difficult projects. We're going to countries with lack of infrastructure. We're going to new countries in a difficult political environment, not so easy. So I think the world's going to struggle to catch up. And that's where it's going to be the thing. What we're doing is we want to say we want to cut the supply of fossil fuels, and we must find the solution. And that's going to be you cutting it, but we don't have the solution yet. So you've got to try and get the two to balance. Can we do it? That's going to be the test.
Okay, whose job is it to do it? So is it private companies? Is it public companies? Is it governments? Is it someone else?
I think it's a mixture of everyone, yeah. I mean, I think it's got to be governments. If governments say we've got to have green energy and we've got to move towards green energy and we've got to get rid of fossil fuels, who's going to supply it? Can private industry do it? And private industry, of course, will push because we know that's going to create higher commodity prices. That's what we want, and we're going to try grow. But provided the demand is there, the demand will be there. But do we have the projects to do it? If we don't, then yes, like China, the government is pushing their companies to grow supply. We see it. We're going to see it in iron ore shortly. You have Guinea, where the Chinese are pushing, their companies to go produce more iron ore in Guinea. So it's going to be a push from governments to make sure that their private industries, their private companies are investing and growing the supply of these important commodities for the new green energy future. Electric vehicles, you're going to have to produce a lot more nickel, a lot more cobalt, a lot more copper. Can we get it if we are going to total electric vehicles? And as I said, by 2030, we're talking 55 million electric vehicles a year. That's a lot of copper, nickel, and cobalt we're going to have to produce. Can we get it forward? And it's going to be a concerted effort, I think, of both government and private industry.
Evan, you're considered one of the fiercest chief executives of this generation.
Really?
So as you're about to step down, what's been the biggest mistake in your career, apart from not giving enough TV interviews?
Look, we all make mistakes. There's certain investments that haven't turned out as we would have liked them, but that's life. We live with that. I think the most important thing that I've tried to do in the industry is to ensure that we don't oversupply the industry, and we try to do that here at Glencore. Reduce supply when we felt the market didn't need it. But yeah, we've had some problematic assets around the world, difficult regions we've operated in. Some didn't turn out great. So I think like any CEO, you got some bad projects didn't turn out. But overall, I think it turned out great. I think the company's done great. We have a great set of commodities, and we're very fortunate that we got the right set of commodities for exactly what we've been talking about. We got the commodities that feed this new green energy. We have cobalt, we have copper, we have nickel, we have zinc. These are the important commodities for the new energy future. So that's what we have pretty happy about here at Glencore.
Ivan, thank you so much for your time today. That was Ivan Glasenberg, of course, the chief executive of Glencore, joining us today.
Thanks a lot, Francine. Thank you.
Thank you.
Mr. Dies, last year you launched the ID.3, one of the most important cars in decades probably for Volkswagen Group, during what was probably the worst industrial downturn since World War II. What have been like the biggest learnings from you from this dramatic situation for you personally as a CEO and also for Volkswagen as an organization?
I think for all of us, COVID was a proof point and a big challenge. And for a big industrial company like Volkswagen being very present in China, in Latin America, in all the hotspots you could imagine, this was a proof to our organization, to the skill of our people to keep the company afloat and running, to keep supplies and also the contact, don't lose the contact with our customers was a big challenge. It started in China, where we are very important. What we learned in China, we then had to translate to any other of the economies we are working in. And I think we managed well. We could make a contribution to societies, to the people. We kept our people relatively healthy, though our staff people mostly in better conditions than in the surroundings. Though that was good, was a good experience, and it showed the performance, but also the commitment Volkswagen can show to society. So this was a good experience. On the other hand, it really, COVID accelerated the digitalization of all our processes. Customers became very digitalized. So I think it accelerated the transition of the world. So quite, I wouldn't call it traumatic, but in some stages it was traumatic, but it was quite an experience for us. It also showed to me personally how important individual mobility is. Now, this lockdown, it was really for me very hard to stand, and also what I really missed a lot was the personal contact with our customers, with colleagues, with partners. So, but hopefully we can recover soon. I think there's good mood now as we are overcoming COVID and we are looking into a more optimistic future now. The launches went quite well of our electric products, also in this transition period. We're now coming with a strong product cadence on the basis of ID3, ID4, Audi Q4 e-tron, Audi e-tron GT, Skoda Enyaq coming. So a lot of EV product hitting the markets now. So we think we did well through COVID, and now we are in good shape and very optimistic about the future.
You did mention the aspect of digitalization and software, and I think it has been one of your key priorities probably as a CEO. What does it take for you to make Volkswagen, or to turn Volkswagen from a big global industrial company into a software powerhouse? Like, which parts are still missing?
Yeah, there's still a lot missing, I have to say. Now, the cars are already today very much software products. The lines of codes in a car are probably 10 times as many as on a smartphone. Many of our processes are already fully digital when it comes to buy a car, to get information. There's a lot ongoing. But the car really becoming probably the most sophisticated internet device you can imagine. Cars becoming driverless and really sophisticated devices. This is a big step. It's a big step for anybody, but it's also a big step for the traditional OEMs. We are gaining momentum. We are investing about $2.5 billion every year in building up our software capabilities. We are buying software companies. We are hiring skilled people. And I think we are really, by the months, we are getting better. And I think we are in quite a good position also to remain a very strong player in this future automotive world, in new auto, as we call it. So I'm happy with the progress we are making, but there's still a long way to go until, I would say, 2030, where many cars would drive autonomously. People would spend the time in the car playing with family or working or whatever. So it's a long way to go, but we are good on the way.
Yeah, you mentioned autonomous driving, and I guess the expectations in the industry have been moderated, at least to some degree, or stretched further into the future. The regulation is still very complex, and in many cases still sort of emerging and developing. In which market are we going to see probably the first Volkswagen robotaxi then?
Yeah, it's probably around the world, because we have the Ford partnership, Argo, in the United States, and I think they are in the first row for bringing the service to market. So they are making good progress. The team is working really well. We are in China partnering with local tech companies to be also within the first companies to offer autonomous driving, mostly in private cars so far, and for sure in Germany, out of the cluster of the premium industry we're having here with the suppliers like the big first-tier suppliers like Bosch and others. We are trying to be competitive in this area, which probably will derive here in Germany more from the open road traffic, German Autobahn towards the cities, whereas in America probably it drives from slower traffic, easier environments, good weather conditions to then become more relevant on the open road. So we are working worldwide. We appreciate that regulations in Europe and Germany have been improving recently, that we can also start testing in Europe, which we will do later this year in Hamburg. We will start with a fleet, still a small fleet, of robo-taxis based on our Volkswagen electric bus, the ID. Bus. So also in Europe, we will start testing. So who is going to win the race? Let's wait and see. I think there's a huge, let's say, many very talented people are dedicating their time into autonomous driving worldwide. Rules and regulations are different. Tech companies are different. And it will be a head-to-head race. I think it's worthwhile competing there because this change will transform the industry more than EVs or the electrification does, because the car becomes so different when it's driving autonomously, and who can drive cars autonomously will have a tremendous value in hands and the tremendous responsibility. And we are pushing to be within this group.
The increasingly sophisticated cars also need an increasing number of semiconductor chips and computing power. What are your key steps that you're doing in this area to ensure the supply chain is resilient? We've seen a lot of shortages across and beyond the auto industry. What are the next steps to make this supply chain more resilient, and also maybe we do like more of this like critical technology that you do more in-house?
Yeah, first of it, what we are experiencing today is mostly COVID-driven. No, there was a huge demand of semiconductors because of the digitalization of mobile devices, any other devices. Any more or less relevant machine or device will become connected to the internet, will deliver data, and one can experience it. So the demand for semiconductors is soaring, increasing. And we have to make sure that we have enough supply. We are working hard. Murat Aksel, head of our purchasing and sales division, dedicates probably 60–70% of his time now to make sure that 22, 23 we will have enough supply. I think it should be feasible because the overall demand of automotive industry for semiconductors is probably between 5 and 10% of the global semiconductor production. So it should be a question of priorities, making the right plans. So I wouldn't expect a constraint for many years, but it will be a constraint for the coming months. And we have to work hard together with our first tiers, but also more and more with the semiconductor manufacturers and also with the fabs, with the producers, to make sure that we get the right amount of capacity for the future. We are prepared to also do commitments, participate in the investments more than in the past, because as we said, the car becomes a computer device, and hardware is the basis for the software we are putting to the cars.
Maybe just to wrap it up quickly, touching on the political side of political affairs right now, the Biden administration has put a strong emphasis on green mobility, on electric vehicles. At the same time, there have been increasing sort of tensions between China and the US. Europe, to some degree, may be undecided. How difficult or easy is it for a big global organization like Volkswagen to sort of navigate these, what seems to be partly diverging technological trends?
When it comes to the international tensions we have been facing, we probably will always face, I also see that there is more dialogue now worldwide, which always is beneficial. We are a multinational, we are depending on free trade, and we have, in most of the regions, we have a huge workforce where we feel responsible for. Now, in Russia, we have 6,000-7,000 people working. In China, 100,000. In America, probably 50 in Latin America. So we are very much pushing, fighting for free trade because we think free trade helps the world. It opens dialogue. It prepares. It improves the conditions for living the wealth in all the regions. And I think there are some positive signs besides all the tensions we are facing, but at least there's a willingness to talk to each other and try to solve problems.
Dr. Dies, thank you very much for your time. It was a great pleasure to talk to you. Thank you.
Thank you, Herr Rauwald. Bye-bye.
Hello, I'm Haslana Amin, anchor on Bloomberg TV. An ongoing debate is heating up. Questions over whether globalization or nationalism will define the next decade. Some say perhaps there could be another option, globalization or a slowdown in global trade. Let's get insights. Kumar Birla is chairman of Aditya Birla Group. And with operations across 36 countries, it gets more than 50% of its revenues from overseas. Mr. Birla, good to have you with us. You know, it's been a strange 18 months and a challenging few years. A wave of protectionism followed by a pandemic. For a company like Birla, a diversified company, how are you growing in this new environment?
No, that's a very good question, Haslinda. I think that it's important to put context to this. So we are, as Aditya Birla Group, a global corporation. We have a presence across the world. We have had a presence outside of India from way back in 1965. We just, for example, celebrated our 50th year in Thailand the year before last and our 25th in Egypt last year. We have a presence across sectors. So we are multi-sectoral and we have a presence in 36 countries. I think that that kind of a footprint allows you to place many bets and you learn from each of those bets. I would say that our pace of activity and the breadth of businesses provide very unique insights on how the world operates. And I think that you can always move these pieces of knowledge around into the future. I think that we've kind of made a shift in our mix of businesses. We're a conglomerate. We've loaded on or over-indexed on the services footprint of services businesses, like let's say financial services today as a business is much more important than it was in the past. And I see that as a complementary counterpart to, let's say, a large manufacturing footprint. I think that the whole theme of globalization just has a much more now. I think it's a reflection of the times that we are in. People are looking for shorter value chains, as we keep hearing all the time. We are looking at regionalism as a very big theme, regional hubs, regional presence, regional employment, catering to regional demand. So for example, I would say that we at the Birla Group are a global company, but rooted in local economics. Having said that, we still remain very much a global corporation. For example, last year, our aluminum rolled products company, Aleris, acquired, our rolled products company, Novelis, acquired another company in its space called Aleris in what was the largest outbound M&A from India at a transaction value of $2.8 billion. So I think whilst global linkages will remain as of now in the current context, and I see that being this way for the next several years, globalization will have a very sharp dimension of regionalization to it.
Mr. Birla, might globalization be the answer, especially against the backdrop of climate change? Or is it better to perhaps look inwards, look towards your domestic market for growth? After all, if you take a look at the likes of the US, it's looking at reshoring as the way forward.
I think that goes back to the question and the issue of regionalization. I think that, again, we're talking about more local, more regional. If you look at the current protectionism sentiment, if I remember right, intra-regional trade, whether it's the ASEAN trading bloc or the Eurozone, intra-regional trade is a much larger part of global trade today than it was in the past. I think different countries, different governments follow different policies to create, for example, homegrown champions, hopefully by giving incentives and not by creating barriers to international trade. Having said that, I mean, we know globalization has helped economies across the world for several decades. It's helped the developed economies in terms of making accessible to them low-cost goods and services, consumer goods at low inflation. For the less developed economies, it's been about creating generating employment opportunities by investing in export-oriented businesses. I think globalization does not need to be a zero-sum game. If I look at data in the last couple of years, the impact of contraction of global GDP has had a far lower impact on global trade than what one would have imagined. And that, I think, speaks to the fact that the fortunes of economies are still dependent on global interlinkages.
I want to take a look at your reach and the opportunities for M&As across borders. You've been pretty aggressive in the M&A space since you took over many years ago. How are you now looking at M&As across borders? What deals might you be interested in the next 12 months? Where, which sectors in particular?
So fair to say, Haslinda, that we have 4 or 5 really large global businesses. Each one of them offers opportunities to grow inorganically. And the question we ask before making any acquisition, for example, is, will this add value to our stakeholders, to our shareholders? What is the specific objective of making this acquisition? What do we seek to achieve? And how will we measure what we've achieved 3 or 4 years down the line after having made the acquisition? So I think, cross-border M&A is something that we still look at very much. We keep scanning the environment for opportunities that add value to our portfolio, especially to
you're looking at making acquisitions in the next 12 months?
So difficult to make a very specific comment. Let's just say that our team is constantly looking at opportunities, scanning global candidates for acquisition, so to speak. So whilst on the one hand you have regionalization, nationalization, we're also looking at international acquisitions, cross-border M&A activity. But the important thing is that in these acquisition targets that we're looking at, there needs to be a strong element of regionalization. So you have interregional, for example, our again, our aluminum road products company has regions within which value chains operate, right from the point of sourcing to the point of selling to the customer. We wouldn't look at a company or a business where you source in one corner of the world and sell in the other corner of the world. That, I think, would be a phenomenon that we would not be acceptable to most global corporations.
Right.
And that's the reset that has happened on account of growing protectionism.
How about opportunities within India? When we spoke 5 months ago, you talked about how you're investing $2.4 billion to ride India's V-shaped recovery. And now people are saying that V ain't coming.
So I think that the alphabets keep changing. But I would say that the economy is pretty much back in shape, coming back into shape. After the first wave, I think it had come back into shape pretty much completely. I think this time around, it's been a setback for a little longer, maybe a month longer than it was last time around. But I pretty much see the economy coming back. I see vaccinations happening much more now. The pace of vaccination is going up. One is looking for a stronger stimulus to the informal sector, which has been impacted much more this time around than the last time around. I believe that the rural economy will rebound on what is supposed to be an astounding agricultural output, a record agricultural output. And I think the medium long-term view on that I have on India pretty much remains intact. Some of the underlying trends of the economy have got accelerated because of this pandemic. For example, formalization of the economy, digitization. So I don't think that anything changes from an economic perspective. This is more an episodic setback than a structural setback, as I see it.
Kumar Bala, we thank you so much for your time today.
Thank you.
Good morning, good afternoon, and good evening, ladies and gentlemen. Thank you very much for giving me the chance to introduce this very important topic for your panel discussion today. It is a great honor for me and for Siemens to have this opportunity to share our thoughts on green urbanization with you. Today's panel discussion is yet another virtual event, which seems to be the new normal. This situation impacts leaders like myself in a special way, because our jobs mainly center around direct interaction with people. And since these interactions under normal circumstances involved a lot of travel, work-related trips have been taking me to the big cities around the globe, to New York, Beijing, Delhi, Doha, you name it. And sometimes I had to ask myself, where do these megacities still want to grow? But the fact is, we are not at the end of growth. We are at the beginning. The world's population continues to expand. According to the United Nations, the population of urban areas could increase by as many as 2.5 billion additional city dwellers by 2050. To support the rapidly growing number of people on our planet, projections assume that the world will add about 200 billion square meters of building space by 2050. Such massive growth would be the equivalent of adding an entire New York City to the planet every 10 days for the next 30 years. This comes with an almost unimaginable demand for water, building materials, and energy. And of course, it goes hand in hand with immense investments in roads, railroads, airports, and power grids to make the cities viable. It is time to care about our infrastructure. Today, cities already consume about 80% of the energy being used on our planet. And the amount for 75% of global CO2 emissions. According to the World Health Organization, 9 out of 10 people in the world breathe polluted air. And based on what we know today, we can assume that climate change will make this bad situation even worse. We need new ways to shape urban growth, to manage this expansion in a way that's environmentally friendly, intelligent, and sustainable. I'm optimistic that we can do exactly that. My thesis for today's discussion is this: smart infrastructure is sustainable infrastructure. Less than 10% of the world's buildings are smart today. Imagine the upside potential. Digital twins, for example, make it possible to improve a building's carbon footprint long before the groundbreaking ceremony takes place. Intelligent, highly connected buildings also form the core for smart cities. From green and smart buildings to green and smart cities, and all the way to a green and smarter planet. Is that easy? Today's discussion will answer the question and many more like it. Together we have an opportunity to make it happen. Thank you for the attention. I wish you all the best for your panel discussion and hope to see you soon.
Hello, everyone. I'm Kaylee Lyons from Bloomberg Television in New York, and I'm joined in conversation now by Ignacio Galan. He is the chairman and CEO of Iberdrola, and Darius Adamczyk, who is the chairman and CEO of Honeywell. We're going to be talking about sustainability and power today. Gentlemen, thank you both so much for being here. And Ignacio, I want to begin with you because Iberdrola is one of the largest utilities in the world. You have renewables operations on 4 different continents, and you were really an early mover in investing in cleaner energy. And you want to double that renewable capacity by 2050. When you look at your pipeline, where is the greatest opportunity to do so? Is it in wind? Is it in hydro? Is it solar? Where is it?
Well, you know, we've been already for many years. I think 20 years ago, we started this. We decided already to move from traditional utility to the new world utility. So we closed all our coal and fossil fuel power plant. And we invest heavily in renewables. Today, we are one of the largest producers of renewable worldwide. And the opportunities now is in all sectors. I think you see already behind me, already offshore wind farm. We are already very focused on that one. Probably before 2030, we will have in operation 12,000 megawatts of this in worldwide. Now we have several of those. We have in United States, we are going to build the first one offshore. In United States, there are huge opportunities in that one. But as well, we have in Germany, we have in France, we have in Britain. And but I think in onshore, we are already been for 20 years on that one in wind, and we continue. I think we are the 3rd largest player in the United States, and we are the largest players in Europe. So, and we continue investing heavily in that one. And in solar as well. In solar, we are already now is very competitive. We are already investing very much on that one. So our plans of investment up to 2025 is 75 billion euros, and up to 2030 is 150 billion euros. In what? Renewables, smart grids, and the storage. And I think that is what we've been doing for 100 years, and we plan to continue doing that one with our record investment since our 120 years.
Yeah, quite a sizable investment. And Darius, Honeywell is making some pretty significant investments as well. I believe half of your R&D spending in new products is toward those that help your customers be better on environmental, social metrics, et cetera. And of course, those customers span a variety of industries. It's everything from aerospace to healthcare to chemicals. Which industry is most difficult to make cleaner and more efficient?
Well, I think they all have opportunities, but I think the one that's undergoing the greatest level of transformation today is obviously the energy industry. And many of the customers that we have worldwide that participate in oil and gas, you know, we're really positioning our offering portfolio to help those companies transform from who they are today to who they're going to be 10 and 20 years from now. And the good news for us is that some of these technologies already exist within our UOP business, within some of the other businesses that we have. And now we're making further investments to make the energy footprint be less hydrocarbon intensive and make the use of renewables, hydrogen, and other sources of energy. And we couldn't be more thrilled to participate in this transformation.
And what do some of those technologies look like, Darius?
So they range. I mean, you know, hydrogen, I just mentioned one. Carbon capture, which is a very, very important technology, which is going to really help in that transitions. Full plastics recyclability, it's something else that we're engaging in and really moving plastics away from single use. Those are just some examples of the kinds of things that we've invented. But maybe what's really relevant is we've come up with a concept called the refinery of the future, which really converts and transforms our refining footprint to what it is today to the future, making it much more sustainable, much more eco-friendly, and really aligning it with that energy position of the future. That's something that we've developed and working with many of our customers today to really help them think through what their footprint may look like a decade or 2 decades from now.
Clearly, both of your companies are innovating in the sustainability space. And that brings me to a question I actually want to pose to our audience. For those viewers, we actually have a poll for you. And the question is, who is taking the leading role when it comes to sustainable innovation? You have 3 choices: A, corporates, B, governments, or C, entrepreneurs. And we should be able to pull live data from that poll now as we get it in. So we'll wait a moment for those to come up. But Ignacio, while we wait for the audience to get their answers in, they should be coming in momentarily. I'm wondering what your take is on this. Is too much of the burden on corporates or on governments, or does this really need to be a public-private partnership?
Well, I think, in Europe has already been approved by the European Commission, the Green Deal, what they call Green Deal. And I think what they're pretending with that one is precisely to join forces of public, private, corporate, everybody to trying to look already for all this one. So I think it's not a question who is going to make. All we need to make something if we would like to achieve what the world is demanding. I think in this moment, the Americans has already decided to rejoin the Paris Agreement, and they are already providing a lot of tax credit and funds for already accelerating this energy transition. In Europe, we have already this Green Deal, what is already European is providing funds to make already this investment done and this research done. And in the case of Britain, the situation is as well similar with net zero target as well. So everybody, we have to do our best for achieving what have to be achieved.
Darius, I'll pose the same question to you. I do want to take a look quickly at where that poll stands, since it does have a little bit of a lag. It looks like the majority of people actually say the innovation is coming from entrepreneurs, 63% with that answer, followed by governments and corporates, dead last, 14%. Does that surprise you?
It does surprise me because a lot.
I'm sorry, Darius.
Yeah, it does surprise me because a lot of the innovation is really within the corporates already. Just to give you a very specific example, a lot of the green technology, whether it be green diesel, green jet fuel, and so on, we're one of the co-inventors of those technologies. And frankly, we've had them within our portfolio for more than 2 decades. The trouble wasn't the invention or the lack of technology, it was the lack of interest. And frankly, we formed an entirely new business unit around sustainable technologies that is not all new and new inventions. It's actually bringing back some of the technologies that we've had in place already for literally decades and actually making much more prominent. And I think the right answer to the question that was posed to the audience is, all 3 entities will play a role. Big corporate companies, entrepreneurs, as well as governments. It's going to take all 3 in terms of solving this important dilemma that the world is facing. And I think that corporates can certainly play a very big role in that.
Ignacio, your thoughts as well. I know you were trying to get in there.
No, well, I think in this point I said already. So we are already a company where we are investing on the range of $10 to $15 billion per annum. To who? We are already buying for entrepreneurs. We are supporting very many entrepreneurs. We think that in our purchase, they can already sell their products. So without engines, without companies, we can already buy all the product they are already generating in the electricity sector. I think they are not future. I'm talking about our sector. So we have dozens of thousands of suppliers, small and medium companies, which we are forcing to them to innovate. And we are already just giving, in many cases, resources for innovation. I think recently it's a company, a Spanish company, Wallbox, which is making already chargers for electric vehicles. I think we have already provided funds for them to develop chargers, which are already those one we are already succeeding now all over the world. And that's why they are going to be listed in New York Stock Exchange in the next few days. So I think I'm convinced that the big corporation, we have already a responsibility to support already these entrepreneurs for already making all they are able to make with their creativity, with their knowledge, with their capabilities. But I think we need tractors we take from them in order that the economy move in the right direction.
So Darius, Ignacio is saying corporations have a responsibility to push this when it comes to entrepreneurs creating these innovations. When it comes to governments, though, do they need to take greater responsibility here? Obviously, in the U.S., the Biden administration has pushed for greater infrastructure and specifically green infrastructure spending. Do you think governments are going far enough?
Well, I think they're certainly taking the right steps. I mean, we see that both in the Biden administration, we see the right steps taking place in Europe. And in other places in the world. So, I mean, I think that this isn't as simple as one piece of legislation, which will all of a sudden unlock all this green innovation. But what I will tell you is that we've seen a greater level of interest in a lot of these green technologies than we have in a couple of decades. So that tells me that governments, not just in the US, but in Europe and elsewhere, are taking a much greater level of interest and are participating in this transformation to much more renewable energy future. So I think that they're very much on the right path. And just to add to what Ignacio said, I do think that big corporations participate in the world of small innovators and entrepreneurs as well. Because, for example, we have our own venture fund, which isn't necessarily there just to maximize our financial returns, but to really help the entrepreneurs incubate a lot of their technologies, help them from a technology development perspective, but also have access to customers. Because when we think about multi-billion dollars, or in some instances, $100 billion companies that are trying to transform their energy footprint, it's literally very, very difficult to partner just with an entrepreneur to support them to a transformation that's going to last decades long. And I think that's a great role for big companies to play.
And of course, the end goal for many companies, including both of yours, eventually is net zero. And I want to talk about net zero. I have another question for our audience, another poll for you viewers. The question is, does the goal of reaching net zero feature in your day-to-day actions? Your options are A, not at all, B, a little bit, or C, significantly. If those in the audience could please choose your answer, we will, of course, wait for those answers to come in. Ignacio, as we do so, your goal is 2050, net zero. Do you feel any pressure to... Sorry,
our goal is much shorter. So I think 2050 should be absolutely a failure of our company. I think we've been for 20 years ahead of that one. Today, our emission is only 28 grams per kilowatt hour, which is 10 times less than our European and American peers. And our target is to be net zero by 2030, 20 years ahead. And I think for that, we've already closed all our coal and oil power plant during the last 20 years. So I think we feel that it's possible to make that in much shorter period of time in power generation. The fact that Americans are fixing 2035 for make already in the Biden administration all the power generation net zero. So I think that is achievable.
All right. Yeah. Thank you for the clarification there, Ignacio. And Darius, for Honeywell, you've committed to being carbon neutral in your operations and facilities by 2035. Our audience says that the net zero feature in their day-to-day actions a little bit. 52% had that answer. Only 16% had not at all, and 32% said significantly. What's your answer?
Well, mine is I probably agree with the audience on this one, and here's why. The reason is why it's a little bit for Honeywell. It's only a little bit because we've had a very, very mature carbon footprint reduction program, which has lasted a decade and a half. And just to give you a perspective, and which gives credibility to our goal of 2035, we've already reduced our own carbon footprint by more than 90%. In the last decade plus. So we know how to do this. We have a program that's running. We deployed over $4 billion to our carbon reduction and environmental programs. So we're very much on the forefront. And what's really important is that we didn't just set a long-term goal of 2035. We've also set a near-term goal of 2024, where we're going to further reduce our carbon footprint by another 10%. And frankly, and this point is really important, although we obviously don't count that towards our commitment and goal, but if you take a look at all the energy savings solutions that we provide to the world today, as well as the world's most friendly refrigerant molecule called Solstice, which has less impact on the environment than CO2, we would already be carbon negative. So I think that says quite a bit about what Honeywell, the kinds of solutions that Honeywell provides for the world.
I want to talk about the inflationary impact of the net zero push. The International Energy Agency has estimated hitting net zero targets requires $5 trillion in investment annually in energy systems by the end of the decade. That's about double the average in the last 5 years. And Ignacio, in theory, more spending could read through to higher prices. And the idea being here that potentially those pricing pressures, as we shift more toward a cleaner economy, are going to be a little more persistent, less so transitory. What is your take on that inflationary impact?
Well, I think today with the existing technologies, the cheapest source for generating electricity is renewables. And I think, and also today with the existing technologies, we can already make smart grids. We can already make very efficient distribution and transmission networks. So I think it's not already any longer that for generating electricity with renewables, it's more expensive generating another one. I think you have already seen, for instance, today we are already producing hydrogen with solar, which I think is the cheapest source for generating hydrogen in this moment. So we are already seeing how the price of the offshore has already evolved in the last few years from levels of 100 euros per megawatt hour. Now it's at levels of less than half. And same thing with photovoltaic, and same thing with hydroelectric. So the technology has already evolved in such a manner that today the renewables is the cheapest source for generating electricity. And with this electricity, the cheapest source for producing hydrogen for those areas what cannot be electrified.
Darius, I want to give you the final word, and this is about returning to the office, because we know companies right now are charting their battle plans, starting to bring more employees in. As they do so, and as people are returning to buildings, how do you at Honeywell make sure those buildings are A, safe for them to be in, and B, more efficient?
Yeah, that's something we actually thought about, as early as 12 months ago, and brought something called a suite of healthy solutions for a lot of the building owners, which not only save energy in the buildings, but also make the occupants much more comfortable and safe to be in the buildings themselves, and measure things like proximity to some of your colleagues, the cleanliness of the air, technologies which remove many of the pathogens in the air. It really gives you all the comfort that you need as an occupant to feel much more confident about returning to the workplace, because we forget that just as it was normal to go to work and get up and go to work every day, that hasn't been the case in the last 15 months. And many of the employees throughout the world are kind of need to regain that confidence, and having those healthy solutions and giving them confidence about returning to the office is something that we're passionate about. We have a number of solutions in. I think it's going to be very important as the world returns to the state of working from the office again.
Absolutely. All right, Darius Adamczyk, Honeywell Chairman and CEO, and Ignacio Galan, Iberdrola Chairman and CEO. Thank you both so much for joining us.
Thank you.
There's something about stories and storytellers. From beyond the mists of time when our ancestors were foragers, stories shared around campfires set alight imaginations. Stories and storytellers are still the sacred preserves of human civilization. Some tell them better than others. One of them is right here in Qatar, and she has stamped her mark on the world through an imaginative retelling of the stories of her homeland.
I think art has no religion. It has no barriers. It's open. It creates that neutral space. We bring people together, linking talent with industry, linking people with great ideas with investors, because that's the way our economy will grow. One of the key components that we're addressing is sustainability and environment, because it's really important for every child or every visitor that comes through the museum to be aware of the destruction we are creating through our habits of throwing, for example, plastic or waste on the beaches or in the deserts. We have the fire station that has invested in artists and creatives. It has inspired young artists or creatives to create their own lines of creativity, whether it's in fashion, in design, in filmmaking, in animation, in graphic design. But at the same time, I think it's very important for each person to have a local identity related to their own roots and culture. And so the localization of a global citizen is very important. I'd like to think about myself as a person who empowers people to be the best that they can be and an enabler. Meaning that any artist who provides a good idea or a good exhibition will have a place to showcase that work.
Joining me now is Dr. Paula Kahumbu, the CEO of Wildlife Direct from Nairobi. Paula, it's so wonderful to see you, and you have had some really great news. You won the Rolex National Geographic Explorer of the Year Award. Congratulations. Tell us how big a deal this is for you personally and for Africa.
Zain, thank you so much. This is a huge deal. When I was a child, the explorers were typically people who were blonde, blue-eyed, pale-skinned, and male. What National Geographic are doing here is recognizing that people, women, people from the global south, underrepresented voices, are being celebrated for their expertise and their professionalism in their fields as international experts. This is opening the doors for so many more explorers around the world in many different sectors and spheres. And I think what it's doing is really leveling the playing field and putting us on equal par. This is what's necessary if National Geographic is truly to be a global organization that is going to change hearts and minds around the world.
Paula, for many years, you have been studying the impact of development on wildlife and how it triggers conflict. What are some of the trends that you've seen?
Zain, it's actually catastrophic what's happening in Africa today. There are international companies that are developing huge amounts of infrastructure, roads, railways, pipelines, power lines, mining, oil drilling, and it's happening inside our protected areas and it's disrupting our wildlife migrations. I think we need solutions quick before we end up with a continent without much biodiversity left.
But Paula, Africa needs investment, it needs job creation, it needs international partnerships and relationships. And we want to trade with different countries around the world and build these partnerships. Where do you see a middle ground where you can have both?
We can absolutely have both healthy environments and development. It just takes a bit of smart thinking. It's been done in other countries, right? We don't have to have these developments that are interrupting or degrading our landscapes. The overuse of pesticides, the pollution that we're seeing is just not sustainable. We have to demand better development, especially from international investors in the continent, because Africa, of all the continents, cannot afford to disrupt its vital life-supporting systems.
Dr. Paula Kahumbu, thank you so much.
Thank you.
Joining me now is Angelique Pouponneau, the CEO of SECAT in the beautiful Seychelles. Nice to see you, Angelique. You have been such a big champion of the Indian Ocean. Why the ocean?
Well, why not the ocean? As a young girl, as a young lady living in the Seychelles, it's really all we know. It's giving us our food, our recreation, time to think, time to reflect, time to have a good swim during the hot temperatures. But it also sustains so many livelihoods and brings in revenue to our country. So as a young girl growing up in the Seychelles, I took a lot of that for granted, I feel. I thought the ocean would always be there. It'll always be as clean and provide for us all of the time. But after staying a few years in London, living the city life, I started to realize how much I missed it, how much I lived in such a beautiful country and never truly appreciated it. And for me, I've taken it to heart to really work hard and support ocean health, especially as so many things threaten and challenge its health at the moment.
In your experience, from everything you've observed in Seychelles and beyond, how should economies, how should countries leverage the blue economy?
Right. So, I mean, with the blue economy, it's, you've always got to remember the three pillars, right? So you've got to remember the economic pillar, the social equity pillar, as well as ocean health. So I think countries need to look at their sectors that they currently have in place, see how it is affecting or impacting the ocean. Is it negative? How can they resolve that? Also see how it's impacting on climate, right? Because the ocean and climate are so interlinked and interrelated. So for me, it's really taking a step back, looking at what we've done and seeing how best to work to make sure that it works for our ocean, but it also delivers on social equity as well.
What would you say the one most important key messages to countries looking to practically adopt tools to further their blue economies?
I think the one key message for me would definitely be, we've made mistakes in the past, but that doesn't necessarily have to be what we continue to do in the future. We have a real opportunity to reshape the way we look at the future, and the blue economy is definitely the way to go.
Angelique, thank you so much. Great to see you. And one day soon, Seychelles, I'll be there.
Absolutely. I look forward to it.
Joining me now is Amina Mohammed, the Deputy Secretary General of the United Nations. Madam DSG, it's so great to see you. Thank you so much for being with us here today. Let me start by asking you this. The pandemic has really highlighted the fact that the Sustainable Development Agenda needs to be adopted even faster. How can we ramp this up now?
Well, absolutely right. Great to be with you. I think first and foremost, let's look for the silver lining in the COVID response. It's really important that what is happening in countries as we look at the socioeconomic impact, that as we look to stimulus packages and fiscal space that's being filled, that we almost take the opportunity to leapfrog. So on connectivity, as kids go out of school, how can we make sure that we improve that infrastructure for everyone? If we are speaking about the transformations and the transitions we need to make for climate action, how can we make sure that we put in the energy transition so that off-grid and renewable goes to women and young people and creates jobs at the local level? So it's really to look at what is it that we've gone off track with and what can we actually not just put on track, but scale up? Because the offer of those investments is forthcoming, not at the levels that we want to see, but clearly it's moving in the right direction, and that's what we really want to reinforce is how can we make sure green transitions become one that we do now and not wait, that the response to COVID in terms of the financial resources, but also the capacities and the vaccine are in place so that we can open up our economies and get back to work on the SDGs.
What does a green recovery look like to you in practical terms?
Well, in very practical terms, first, let's make sure it's moving towards a 1.5-degree world. It's really important that that transition happens. Second, that we see the financing flows come to us where there is 50-50 spent on both adaptation and mitigation. And so when we come to countries that are investing, let's invest in the energy transitions, going to renewables, whether they are solar, they're hydrogen. You need to make sure that that happens at the local level and at the level at which is creating jobs. The connectivity that we talk about, the digital divide, closing that in a transition that sees infrastructure greener. And then to look at the food systems again. We are going to want to and need to transform the world, the way we consume, the way we produce. And so the food systems, that ecosystem itself, the full value chain, the full cycle to that needs also to change, and we need to take profit of that. So that green transition needs to be resilient, needs to focus on 1.5 degrees, and it needs to make sure it's inclusive and that people, especially young people and women, are at the center of the results that we see in that transition.
Let's focus on the impact of the pandemic, in particular on women and girls. DSG, it's been so profound and such a huge setback. Where does the recovery there even begin?
Well, I think it begins where you can identify and see the impact. I mean, the impact has been on women and girls. I think they felt that most, whether it is in the informal sector, where suddenly you're taken out of an income, a workplace, where you are perhaps even supporting the family and the community, and to find ways to bring one back into the economy. And in the meantime, there must be some bridging. So social protection programs are really important to women and to young people in the job and the informal economy. The second tragedy that we have is that we've seen gender-based violence really scale up. I mean, in a way that we can say that that's the silent pandemic. In the lockdown, we find many women locked away with their perpetrators and nowhere to go. But as we are coming out of this, there needs to be a full-scale addressing of this as we would a pandemic, with champions in our leaders, in our countries, to acknowledge that we have to bring gender-based violence to zero. We've seen more marriages, early marriages that shouldn't be happening. We've seen more girls who've fallen out of school, may not go back to school again. So the risk for remaining off track and the impact that this has had on women and girls is huge. There are many, I think, instances now where we are getting more clarity, country by country, where these issues are and how to prioritize women and girls back into the investments that we make in the economy. I think perhaps the third thing that I would speak to is women's leadership. It's been seen around the world that it is women in their leadership that have been able to look across the full spectrum of the dilemmas that we face and the challenges. And so to see women in leadership roles where decision-making is being made about resources and how they are shared, it will become much more equitable. You put a woman in charge, doesn't leave anyone behind. It's important to see that in the elections that continue to happen, that we continue to have the opportunity of that space opened to a 50-50 parliament. I think the affirmative action over 30% is important, but we need to see much more than that so that we can begin to take decisions again over laws, over legislation, and over appropriations that are made for that. So I think, again, the women's agenda is a rights agenda, and women are 50% of our human family, and they need to be included. And this has never been so stark in our absence that, one needs to take profit of that. As I said right at the beginning, there is a silver lining, it is possible, and we can begin to recover in a much more equitable way with women and young people at the center.
Speaking of equitable, let's look at the SDGs themselves. DSG, you played a key role in drawing up the 17 SDGs. How do you assess where we are now with them today?
I'm still very hopeful that an integrated agenda like this is an integral part of what each country does in order to give their people fundamental rights. We are off track on the SDGs and further off than we were when before COVID came. So, but I am hopeful that what we can do is that we can begin to accelerate. It's become plain and clear where these, where we've seen COVID look at the exacerbation around inequalities and how we can bring those back front and center. So SDGs are off track. But there's a lot to do that we can put them back on again. There's a decade of action. There are the unfinished MDGs, which are the first 6 goals, from ending poverty all the way to sanitation. But the middle piece, from 7 to 15, are where major investments are needed. And this is where we need the global community to stand up and have that response in which we can invest in countries. This is not charity. This is in everyone's vested interest to see a more peaceful and stable world, where economies are not so stable, where there is exclusion, then we will continue to see the instability, the insurgencies, and women, of course, bearing the brunt, and young people without hope. This is a time when there should be an intergenerational transition, that we profit from COVID to see a much more equal world. Finally, I think with the SDGs, where we are working really well, is seeing that, that there is a focus on building stronger institutions and partnerships that need to come in to ensure that the financing of this agenda at the scale that it is needed, that we are more ready and capable of doing.
You spoke of accelerants. I wonder if you can comment on the state of the United Nations itself today. I mean, the world has changed so dramatically since the formation of the UN back in 1945. I mean, many of its structures are still kind of the same. What are some of the reforms you think need to happen in order to bring the UN into the 21st century?
Well, clearly, 75 years later, we are not facing the same challenges, and we are more capable now ever, and more included and inclusive than we've ever been, and connected. So the UN, I believe, continues to be the global town hall for our human family, our global village. And I think what we have to look at is how we can continue to ensure that people can come into this space, that there is a network multilateralism that allows all the stakeholders to come into a member state institution and deliver the expectations to we, the people. The reforms in the UN, it's not the first time that we are engaging on reforms. We've had the development reform, which has really put a stronger coordination and platform in the 131 countries that we are in to deliver on the SDGs. But there's also been a lot of efforts made in the other structures, the Security Council, which everyone looks to keep the peace. And here the SG, through the COVID year and 3 months that we've had, has had a call for the ceasefire. We have had a call for human rights. We have had the calls for peace in the home. And so our job in the Secretariat and with the Secretary General is to just reinforce and inform the need for the transformations that face another generation. 75 years in, it's not going to be those that form the UN that will be taking the baton forward. It's young people. So that intergenerational transition, where the largest cohort that we have today of youth is existing. So, yeah.
And just real quick, you talked about women being in charge 75 years on. Do you foresee a woman being elected Secretary General of the United Nations anytime in the near future?
Absolutely. I would say that, you know, when we come to the next elections, there should be a woman. There's no reason why there should not be a woman. We are equally capable of bringing the solutions and leading, you know, the support to member states in the United Nations. So absolutely, I will be there making sure that we put our shoulder behind the wheel to getting a woman in place.
We know you will be. Thank you so much for the great work that you do. We really appreciate your time. Deputy Secretary General of the United Nations, Amina Mohammed. Thank you.
Thank you so much for having me.
The passion is palpable. Sustainability champions around the globe are increasingly having their voices heard in boardrooms, courtrooms, and the corridors of power in national capitals. Recent court rulings in Belgium and the Netherlands set new precedents for courts in the European Union countries. Boardroom revolts at oil giants Exxon, Mobil, and Chevron sent a shock felt around the world. The movement is gaining momentum. The only question is whether it's too little too late. We'd like to thank our underwriters in Qatar, Media City, the Ministry of Commerce and Industry, and the investment promotion agency Qatar. I'm Zain Verji. See you tomorrow.